Welcome into Kaspa Crypto. My name is Chase. I'm a level 1 CMT and full-time trader. Today we're going to look at Kaspa. We're going to do an update, potential breakout here, and some very bullish implications I'm going to show you right now. If you like the video, give us a thumbs up. If you want more help navigating this cycle, all my thoughts being in crypto for the past almost 8 years now, consider subscribing through Patreon and get access to our private Telegram alerts group. We keep you updated on all the ins and outs on a daily basis. So if you want more extra help, that's where to find it. Should be linked just below. So let's get right to it. Gaussian channel here on the weekly. We just last week, for the first time in a long time, closed a bullish candle above the top of the channel. This is where things can start to get really good, right? As far as the bulls go. We also have this range high, right? This is the zone we need to get above if we want Kaspa to have another explosive move. So what do I mean by explosive move? And why is this important? Well, first and foremost, this has been a 10-month consolidation, right? From our high in February, right? We're looking at 10 months now. Once we break here, this is when the traction picks up. So initial explosive move, right? This is over a 13x from here. Right, this is just the initial move here, almost a 1,200% move. Well, let's see what that would look like if we do that again. Look at our Fibonacci extension levels. How high could we go? Well, with a 10-month consolidation, right? Bitcoin consolidated for 8 months. It's done pretty well on its breakout. I would expect something similar, if not stronger, out of Kaspa based on that. Here's our level. If we can clear like 18 cents, right, things can start getting really bullish. And how high could we potentially be going? Well, we've looked at it in previous videos, but let's do a rough estimate here. So to our 1618, we have a 2x, right? No big deal. We're easily going to do that. Could we do another 4x and get 300% move to the 2618? Sure. How about the 3618? Is that possible? $1.50? Could we knock on the door of that? 9x almost. And our 423. Well, you remember our initial move did 1,200%. Just repeating or rhyming with that move gets us up here again. That wasn't even an alt season, right? That was just like the initial explosive move up. Consolidate, right? Why did we consolidate so long? That's a pretty strong move to go up 1,200% in less than 6 months. Of course, you need to consolidate and build, right? We're building the pressure back up. Consolidating above 10 months, above the Gaussian channel on the weekly. And we just closed that last week. Range highs at 786. That's 18 cents. We haven't had a close above 18 cents since our high right here in July. Make no mistake. Once Kaspa closes back above 18 cents, we have fuel. We have the green lights. It's just a matter of time. Alt season has begun, and some might be a little bit more delayed than others. Maybe Kaspa's in that boat. 10 months. The wick is lit. So be warned, we're looking for a big explosive move. And again, like it can move when it wants to, right? These are the kind of moves we're here for. We're here for this. Maybe we get this kind of move. 200 or 300% right out of the gate. Where would that take us? 200 or 300% from a top of this zone, right? I mean, we got to readjust the damn screen. So that takes us right to the 2618 if we mimic that move. Just this right here. If we explode, see the range highs? Explode from range highs, 300% move. Mimic that move alone. Gets us right to 70 cents. Like, teleport. I would expect a big move out of Kaspa once we do this. Based on how long this consolidation is. Based on how this chart is looking. It's not to be faded. Alright, that is our Kaspa update on the weekly. Hopefully that excites you a little bit. Fibonacci extension levels look great. Don't see it. Not happening. Many of those. Absolutely possible. So, yeah. Follow along for more content. Let's do our quote and card of the day, and we'll let you go. But first and foremost, let's look at the Fear and Greed Index. We've been up here for a long time, ranging. Right? We're still in extreme greed. Last month, we were at greed, but we could stay up here for weeks, if not months longer. Okay, so don't fade it. If you look at the max version here, right back, this goes all the way back to 2018. That's where kind of we started following this. We went for like 3 or 4 months at really extreme greed, like above 90. That was in 2021. That wasn't the top, right? The top was almost a year later. So yeah, we're up here again, but it could last for a while. So don't read too much into that. If we have a move down, great. It'll just extend the cycle that much longer. We want to kick the can down the road. We don't want to see Bitcoin getting too berserk too quickly. Bitcoin dominance, we got to get under 54 to get a full-blown alt season, in my opinion. We've been talking about that in our group for months, if not year plus. Tether dominance doing what it needs to do, right? This is people coming back into the cycle, right? Leaving stables, right? Okay. So if you want more help on that and looking at all this data, right? We track all this in our Telegram alerts group. Can be found below. Patreon. Hope to see you there. So let's do our quote and card of the day, and then we'll let you get back to it. Civilization began the first time an angry person cast a word instead of a rock. All right. Favorite car? Koenigsegg Jesko. You can have one for about 3 million. Probably 5 now. Pretty rare. Custom. I mean, any Koenigsegg is great. This one just happens to be my favorite. If I could pick out of the few that they have, this would be mine. Same spec. Like the lime green and white. Polar white. Pretty great. All right. Go check out these doors if you haven't seen these open. The best doors on the planet. They put Lambo doors to shame. Koenigsegg. All right. I'll see you on the next one. Hope to see you in Telegram. Let me get a comment from you down below. Thumbs up. If you like this, we'll do more.